Welcome back. You're watching Dukascopy TV. I'm Darren McDermott. I'm joined by Sevin Ekinci, founder of Ekinci Economics, to have a look at today's decision by the Central Bank of Turkey to keep rates on hold. So what are your views on this decision today? And what sort of trading trends are we seeing with the Turkish lira?
Although they kept interest rates at the same level today, they announced that they have cancelled to do 1 month repo auctions. So they will not hold 1 month repo auctions for a while, and it shows that they are on the tightening stance. And interest rates will approach to 7.75 at in this case, because previously, if you check the interest rates in the market, for example, the central bank average funding rate was hovering around 6.5%. I'm expecting it to approach to 7.75% to stay around 7.5%. So this will certainly affect the FX markets, and we already saw the effect in the Turkish lira. After the decision, Turkish lira strengthened by around 0.5% against dollar. It is now trading at 2.01, but before the central bank announcement, it was trading around 2.02. I am actually expecting a more strengthening move on the Turkish lira. This is mainly because about the global central bank decisions. I'm thinking that Fed will not taper in its 18 December meeting. So until that time, there will be some volatility. And to reduce this volatility, that's why the Central Bank of Turkey started doing this 1 month repo auction.
And Turkey's October inflation, which came out at the beginning of this month, showed a hike above expectations due to rises in food and clothing. Also, the inflation rate year on year is 7.7%, which seems far from the central bank's inflation forecast. So do you think this is unrealistic and unattainable?
Well, their forecast is unattainable. The official forecast range is between 6.3% and 7.3%, and the medium point of it is 6.8. So actually their official forecast is 6.8, but this is unattainable. Our forecast, Ekinci Economics Consulting forecast, is 7.8% for this year. And the market consensus is 7.7. This is unattainable, and if it's realized above 7.3%, the central bank will have to write a letter to the government why they did not reach this official forecast. And of course, this is not good for the credibility of the central bank, and they will further have to make some explanations to the markets. Actually, their medium-term target is 5%, and they keep saying that they want to reach this 5% inflation target in the medium term. But with these rates at 4.5% policy, and without changing the interest rate corridor, it will be really unattainable to reach this 5% inflation target. Well, I want to also say that they have made an announcement about the inflation report, and the inflation report, the 6.8% is a revised forecast. Previously, it was 6.3%. And I understand they are quite cautious. They try to contain the volatility in the FX market, but this will not be available if they do not increase the interest rates, the policy rates. But I also understand that because they are seeing high turbulence, high uncertainty, they kept away from increasing the interest rates. I think they are trying to see what United States Federal Reserve Bank will do, and after that they will take a decision. Well, their next meeting of Central Bank of Turkey is on 17th of December. I do not expect any other move on any change on the interest rate on that meeting either, because the next day there will be United States Federal Reserve meeting.
And finally, in terms of a bond market, what are your projections?
We will see the rates to hover around 7.75% in the bond market. And let me tell you about the rates in the bond market nowadays. The 1-year interest rate was 8.7% before the meeting. It now increased only to 8.73%, and 10-year interest rate was 9.05%, and after the meeting, it increased to 9.07%. It did not. The bond market did not show sharp reaction. However, I'm sure the interest rates on the 10-year government bonds will be about 9% for a while. Especially for 2014, in the first quarter of 2014, we will see higher interest rates in the secondary bond market in Turkey.
Thank you very much. Well, viewers, do stay tuned as we have plenty more coming up in the show today. But for now, goodbye.